Okay, quick Monday morning radar update. So we've gapped up today. We've just closed the gap. So we'll see what the market wants to do as we head towards the US session. Thought I'd do something a little bit different. It's Monday morning. The market takes a while to sort of come to life, doesn't it? So, thoughts over the weekend. The market, very grindy. It's basically grinding up a lot of people who have entered the market over the last year or so. So, a few popular things. What you'll sort of hear over the years is popular quotes, should I say? Is you've got to adapt to the market environment. Always adapt. Your methodology is always going to be changing. From someone who's been sat in front of the screens for well over a decade, I actually don't agree with that one bit. The basics of this game is, if you've got a methodology that works and is robust, it will come in and out of play, but you don't have to adapt. The way I trade the markets is everything what's rising will go through my screens. The way I screen the markets, and pullbacks and breakouts. Choose the stocks what I like to sort of trade, and everything has its shelf life. Stock will make a fantastic trending run, and it will run out of steam. It's probably going to be on the best numbers when it does run out of steam, and it's a rinse and repeat, and money will just keep rotating, and the markets will go through very easy phases, and that's when a lot of new money comes to the market. Everything seems to work. You think you're making money through skill, and actually it's just through blind luck. And at the end of the day, the market likes to sort of price all this frothiness in, and at the end, basically the market is like a dog with fleas, and at the end of the day, it's going to have a good shake, and it's going to shake off all these people who've accidentally made money, and the people who've managed to sort of learn some hard lessons and build some risk management into their methodology. Those are the ones who'll stick around and make money on the next easy money market. So, it's a game of grinding market periods. And I'll say it again, the market's been pretty grindy from what I look and see, but for my methodology, it's just, it's been grindy, but it hasn't been tough, it's just is what it is, So I thought what I would do, what you tend to see a lot of, well, all the time, but especially in this market environment, is, a lot of these stocks what have been really, they've made big trending runs. And lesson number one, if you want to ride trends, you're not going to be screening for big trending stocks. Because the idea is you profit from the big trend, not you see the big trend and then you go and chase it. So what tends to happen, a big mistake if your game is riding big trending stocks, is looking for them in that way. If you look left and see a big trend, you've already missed it. So you've got to have a different way of getting on board trends. And the reality is, you buy a signal and you don't know which one's going to be the trend. But if you feed the winners, prune the losers, you will end up in those big trends. At the end of the day, all trends end badly. You get stopped out. Winners, big winners will take back the tail, and you compound, you move on, you move forward, you just keep looking, turning over those stones at the right hand edge, looking for those next trending stocks. Now, the old popularity sort of these stocks what have made these big trending runs, everyone is interested in the popular stocks, and this is why the media just spoon feed you, gore this, boo that, best of the best this, and this is always going to be popular. What people want to read is about these stocks what have made these huge moves, and then what's even better than that? Well, they get axed, and then it's like by the knife, and they're always going to be popular. And I think the last couple of weeks has just been unbelievably sort of frothy in that, catching knives, and everyone's got an opinion. One thing to say, just because I might be bearish on a stock what's broken down after a trend, well, just because a stock's broken trend and I put it on the it's broken list, it doesn't mean I have to be bearish and be a short trader of that stock. It just means I avoid it. I'm a long trend follower. Knowing when stocks are broken and to avoid them is probably one of the most important sort of lessons people need to learn. When something's broken, it might be a bargain, it might not. It doesn't matter. At the end of the day, can you make more money than you're going to lose trying to sort of catch these knives? It's a tough game. Probably not. But so what I thought I'd do is I'd just go through a few of these stocks. There's stocks on here I've been negative on for such a long time, and they kind of run out of steam. They make big runs, but all of a sudden, you look back at them and they're low. They're moving lower and they're moving lower again. I'll just go through a few of these and don't take it as a negative, me being negative on these stocks. It's just a matter of fact for someone who trades. You get to choose your battles. I choose the easy battles. It's just a matter of fact. These stocks are in these areas, and it doesn't matter if I'm bearish on them. I'm not short them. I'm just trying to, that there are easy battles, to take on. They're not going to be found in this kind of price action. They're going to be found at the other end of the trend, where these stocks I talk about now, the Gore, I'll go into Gore. Let's just go straight into it. Actually, the easy battles are going to be found on the start of the new leg. This is the first time we looked at. We put it on the base list, Gore, and it broke out, and then it went up through 52-week highs here at 627 area. So it went nearly 2,000% on that run, didn't it? It broke trend. It didn't actually break trend here. It kind of hung in there. It did break trend here, as everything did on the crash nearly. Probably 60-70% of things broke trend on the crash, didn't they? But it's set up again. It went on another run, and this was kind of a last chance saloon run for me. But what I want for the fundamental people out there, I'm just going to do it again. Stocks trend towards as the risk unwinds and the profits accelerate and the fundamentals accelerate, stocks trend towards that. Now, stocks top on the best fundamentals as they start to deteriorate. Now, what we've got in Gore is just, I'll just bring it over on the GTRS, and we've been, this has been under distribution for months now. Been noting it for months, and it just ran into the deceleration in the forward numbers is absolutely abrupt. Is basically abrupt deceleration in the forward numbers, and look at this. This is not a growth stock anymore, and look at the PEG ratio. So there's no surprise in why Gore is trading 52-week lows. Yes, I've got some pullback targets on that, but it doesn't mean it will get there. It's just something I always do when I draw a purple line. I will put my sort of areas, what I expect it to, the downside. Basically, I put these areas in just to say, once it gets to this area, 80% 80% of stocks what basically break trend but will tend to half in price, lose half to 2/3 of the prior run. So, you know, it is what it is. I'm not saying it'll go there. I have no clue where. Nobody knows where anything will go. All I'm trying to say is structurally, if I flip this chart, you know, I'd rather be long that than short it. So, you know, basically in the real world, we'll invert it back. Yeah, it looks awful, doesn't it? You know, bounces into this zone, you know, just look awful to me. Would I short it? I'm not interested. I'm a long trader. I'm not going to short these kind of stocks. Anyway, just one thing to know, and look at your fundamentals on this. Look at the deceleration. It traded towards this huge move. It doesn't mean it's gonna, you know, we'll just leave it there. Nobody knows where it's going, but you know, if you look left, see a huge trend. You missed it, didn't you? You know, it's clear as day. Where were you down here? That's where you've got to exist. Look for the next goal. You know, this one's had a huge run. Next up, but I suppose we'll bring Avon up because, and I'll tell you now, you know, this one's been structurally bullish for a long time. It went on some good runs, but it's a little bit of an efficient stock, so not great for a growth trader. But it had an okay run. It's given it all up, hasn't it? It's, you know, I drew the line on it up here when it broke this line and into supply, down it goes. It's an avoid. What about, you know, do a Twitter search and go back to this period of time and have a look what all the popular people were telling you about this stock. Guess what? The forward numbers, absolutely awful. It ticked down on the forward numbers. It's actually got those numbers not quite behind it, but it's through the prelims. You know, where it goes, nobody knows, but it's give the whole move up. It's, you know, the whole move gone. So just remember, anyone can do this. Anyone. You don't need to read it in a newspaper. You know, just if you trade fundamentals, well, have a look at those numbers. It's, you know, a line in the sand beats the numbers. It really does. It tells you where the stock is rising. Guess what? You know, the fundamentals could have been fantastic for a whole year here, but the stock didn't start rising till here and start trading towards the fundamentals, and off it went on its journey. So, you know, that one's, am I bearish? No, it's gone. It's took the whole move out. Am I bearish? Secretly in my head, yeah, but you know, the trend's down, always bearish. But you know, it's just an avoid. It's an avoid from me. Boo. You know, this one here. I'll tell you the and this is without going through the volume on these, because the distribution has been, if I go through the volume on all these stocks, you can see the footprint of the institutional distribution. Look at it, you know, it's just red and there's no green. It's been sold by all the way. So, you know, the footprint is there on all these stocks. We got bearish on it here. We had a little vote back to highs or down to I think I said 150, and it went straight to 150. You know, well, it didn't go straight, but it went there. And then it started going sideways, and we got new setups here, but it, you know, my view here was it's a big efficient stock now. It's not what it was, you know, different stock. And then it traded some swing moves, and then bang. This action here takes the lows out, takes the highs out, and horrible volatile action. It usually ends, you know, it's action you don't need to be part of, because you need a 50% stop just to take on this apparent, you know, stocks don't trade like this if the fundamentals are good. And to take that on, you've got to be, you know, happy with losing half your money. And that, you know, it doesn't really work like that, does it? And yeah, that one's hit the target, hasn't it? As good as hit the first target for me. And you know, I'm going on the whole move now. You know, it's probably going to keep going. I mean, do we look at the fundamental case on this? Yeah, negative decelerating. Positive DC. Yeah, awful. Absolutely awful. You know, it's basically it's taken out in the pre-tax. It's taken out the 2 prior years. So, and another little tip I'll give you here is just ignore anything out from the numbers what it's trading towards now. These are cloud cuckoo land. You know, sprinkle fairy dust on this. This one's had lots of fairy dust. You know, it doesn't matter. Nobody knows 1 year out, never mind 2 year. 1 year, you get a little bit of an idea. It's the best you've got. Ignore anything further than that. You know, you're basically buying a lottery ticket on those kind of things. Boom. I'll just go on this one. I know it's out of the wheelhouse of a lot of people, but you know, it's a classic case of the psychology of, you know, I traded this little move here, and I knew what it was. Real POS stock. And then it started getting pumped on these popular podcasts and that. You know, a guy who used to have me on fell out with me because I was bearish on this. Not bearish, didn't have a short. It was just a clear avoid from this point onwards, and it went on to just go to virtually nothing, didn't it? And I know the price has changed since with the consolidation there. But this is where it hit my screens again. It was actually trading towards a few of the growth stats that I follow. Guess what? It went and did a big move. You know, it started, you know, stocks trend as the risk unwinds. And this was on the risky end of the scale, but, you know, fantastic. Moving on. And I think we'll just go best of the best because, I mean, this is a classic case. It didn't hit my screens until sort of as anything worth buying until it got through. It was somewhere in this period. It got through some reason, probably this one here, and it started trading towards a new set of numbers. But you know, this here is just a huge multiples were made. Huge multiples were made. I thought this was risky. You know, my view on this was it's that deep first pullback. We saw it in ARB as well. It's a risky one, this. Sometimes it works, but you've got to be nimble if you're going to take one of these deeper pullbacks, because I think it pulled in about 40% and about 40%. And that's kind of not the business I like to do business. You know, it's a little bit of a breaking trend in my view when on a lot of stocks when they pull in that far. But this one, no, it pulled in and it kind of came down to the 10 month, didn't it? But the story was, I mean, you know, the technicals of these things, it's very simple. If a stock has got fundamentals, you know, for those fundamentals actually to pay out, it's got to trade a technical level. You know, no stock is you're not gonna get paid big on a stock if it's just a reversion to mean, you know, and it doesn't even break 52-week highs. I mean, you know, yeah, in some cases, in some penny stocks, it's going to be a big move. But, you know, if you want to trade sort of stocks what are a little bit lower risk, higher growth, you know, you're going to find those trading highs. You know, you're not going to find them in the bargain basement. You know, obviously they will be in the bargain basement sometimes, but that's needle in a haystack kind of investing. You don't have, and the big point about that is when they're in the bargain basement, you know, they won't have those. They just won't have those growth stats. What will make it trend? When those growth stats start hitting the tape, they will come out of the bargain basement, and you will find them, you know, trading in the top right hand corner of the screen here, you know, on over a reasonable time frame. So, you know, you could say, well, what about best of the best? It was in the bargain basement over here, you know, 55%. and then you scroll forward, you go, well, yeah, it went side, it held up, it went sideways, and then all of a sudden, we drew a line on it here, it's. And then off it went. It's in the top right hand. Simple screen. Only look at stocks what are in this box here, the top right hand corner, and you will do okay as long as you're not looking at a daily chart. So, what am I sort of getting at full circle here? All these stocks what are down here, there's no reason for them to reverse. I know the story's fantastic on a lot of them. The story gets better the lower they go, and then they just disappear. A lot of them just, they don't do nothing for years and years and years, and you don't see them again. Another thing I will say is, you will hear a lot about stocks what have gone sideways and bumbled around on the lows for a year or more. When you see base in action, what kind of lasts a long time, it's because it's just bumbling around and there's no reason. If it breaks out, people tend to say, the bigger the base, the higher into space. I'm primarily a breakout trader. I've got well over a decade in front of the screens trading this every day. I know every big winner will trade those levels, but out of all those big winners, actually, it's actually the big bases. There are few and far between, and there is absolutely nothing. I look at every trending stock. It's my screens through every market period. There is nothing in my research that tells you that bigger bases go higher into space. It's actually the ones what base out over sort of a few months or so, and strong stocks break out quicker. That is the reality of it. So, it's nice to pick stocks coming out of stage bases, meaningful bases, but the stronger ones all tend to come out of pretty small bases. It is the way it is. The bigger the base does not mean it's going to go higher into space, is basically what I'm trying to say there. So that's just it's quite a long video there. We just go through a lot of stocks. If you're new to the markets, you've probably heard lots of good stories about these stocks. The story gets louder the lower the stock goes, and the reality is, if you exist where fundamentals and technicals meet, simple breakout, with a reason for the stock to break out, that is where you're going to find trends. That's where they're all going to trade those levels. Some stocks without fundamentals, what go on to be big trends. Stocks can trend on other things than fundamentals. Look at Tesla. Look at some of the crypto stocks, and stocks can trend a long way on stories alone. So, they will all be found, top right hand side of the screen. If you do business down here, it's going to be an extremely difficult sort of, if the market did roll over, doing business down there, where are you wrong? And the cheaper these stocks go, the faster they halve in price as well. So a stock what's £1 will take quite some time to go to 50p, but a stock what's 50p will take less time to go to 25p. A stock that's 1 pence can go to half a pence overnight. So, the lower they go, the faster they halve. So, that's another really good point. This video, I'm not putting it out there to poke the hornet's nest. I'm putting it out there for all those people who are struggling in the market now and finding out that these great stocks, what everyone's telling you about and you're reading about, you're actually reading about them because, they are giving you what you want to hear. And this game is not about that. It never will be. There's the there's the media side of it, and then there's the making money side of it. And the making money side of it, nobody's going to be talking about your next big winner when you buy the low risk entry. That is the reality of it. If everyone's talking about it, we call it the story zone. You know, you've already missed it. Okay.